I spent this weekend reviewing financial news and researching stock charts, and I found some stocks that look good for option trades. I'll be sharing with you the stocks that I'm going to be watching this week, January 25th through January 29th. First one on my list is a stock to watch under $20, and it's Inseego Corporation, stock symbol INSG. Insego Corporation is involved in the design and development of mobile Internet of Things and cloud solutions for enterprise verticals, service providers, and small and medium-sized businesses worldwide. Now, this company provides wireless 3G, 4G, and 5G hardware products for the vertical markets, including the private LTE and 5G networks, First Responder Network Authority, FirstNet, telematics, remote monitoring and surveillance, and also fixed wireless access and mobile broadband devices. Now, its product base includes 4G and 5G fixed wireless routers and gateways, mobile hotspots, and wireless gateways and routers for all of the Internet of Things applications, and they provide gigabit speeds for 4G LTE hotspots, USB modems, and integrated telematics, along with mobile tracking hardware devices, which are supported by the application software and cloud services designed to enable customers to analyze data. Okay, so what does all that mean? Well, basically what it comes down to is the fact that Insego, stock symbol INSG, provides the networking infrastructure that allows 3G, 4G, and 5G networks to operate. So why is this important? Well, we're all talking about faster phones, right? We've all heard about 5G as far as communications, but also faster download speeds. And then when we think about it even further, we're going to be talking about autonomous vehicles and getting information back and forth from the vehicles, not only mapping software, but data analytics, and being able to provide information to supercomputers so they can help provide collision avoidance, faster routing, and things of that nature. And what's so interesting and a key factor to Insego that I envision is the fact that they're positioned really well within this 5G network space. It's actually their networking infrastructure, their products and services that actually help empower what we see as end consumers. And so they provide their products and services to the carriers. And this is what allows the carriers to offer the service to us end consumers. Another way to think about it is we kind of heard that analogy that during the gold rush, you didn't want to be a miner panning for gold. You wanted to be the guy at the base of the mountain selling the picks, the axes, the shovels, and all the equipment to the miners. That way, it didn't matter which miner actually struck it rich. You would collect money and make profit from all the miners buying the equipment from you. And this is similar to where Insego is sitting. So they're providing goods and services, all of these products to the end service providers, those carriers. Maybe you've heard of and are familiar with some of their customers. They include Samsung, Nvidia, Nokia, Ericsson, Qualcomm, and VMware. Also, as an end consumer, maybe you're familiar with some of the Insego products that we've seen at our carriers, including 5G hotspots like the ones at Sprint Corporation with the Insego 5G MiFi M2000, US Cellular with their 5G MiFi hotspot, and T-Mobile, which also has a 5G MiFi M2000 hotspot available. So I activated my Robinhood account and I brought up the option chain for Insego Corporation, symbol INSG, and specifically I picked an expiration date of February 19th of 2021, which is roughly 3 weeks from the time I made this recording. Let me zoom in so it's a little bit easier for us to review. So you can see that Insego INSG closed at $19.17 last Friday. And right now I'm considering writing a cash secured put with a strike price of $17.50. This is a daily chart for INSG that goes back for the past month. I'm going to zoom in so it's a little bit easier for us to visualize what I want to talk about. First, I noticed there was a gap up in the price on Wednesday. You can see it here. And it's because there's no overlap of the stock price between the close of the previous day and of the opening of the next day. The next thing I looked at was the two previous high points that are here and here. And then if I draw a line connecting those peaks, I come up with an artificial support line. And it looks something like this. So because of the gap up and this artificial support line, I'm thinking that if the price dips, it may get to this point, but then it'll shoot back up. So I'm thinking this is going to be the low point if it dips, which is right about $17.50. So if the market conditions look good this upcoming week, I plan to sell a cash secure put using $17.50 as my strike point. That way, if I get assigned the shares, I know I've got it at a good price. But if the price never dips this low, that's okay. I'll still collect the premium. So now going back to the option chain, this is for the expiration date of February 19th. and it's for selling a put. And I'm looking at the $17.50 strike price, which has an option premium of 88 cents per share. So one of the things I consider before selling a cash secure put is I like to go through the numbers just so I understand what's happening. So I'm considering selling a cash secure put for stock symbol INSG, and I would sell one contract, so that's 100 shares. It would have an option strike price of $17.50, and for that there's a 88 cents per share option premium. Now the collateral required for me to sell this cash secured put is $1,750, so that money would be reserved as collateral. Now, if I were to sell this cash secured put and it got filled, I would receive $88 in premium, and that $88 represents just over 5% return on my investment of $1,750. So that's a 5% return on a 30-day option contract, which annualized is about 60%. So even if I don't end up getting assigned the shares, I'm okay with a 60% annualized return. This next stock that I've been watching, it's under $25. It's a special acquisition company, or SPAC, as it's sometimes referred to. Now, I've been watching this SPAC for a few weeks now, and I purposely haven't shared anything yet because there really isn't any news to share, just a bunch of rumors. And the name of the SPAC is the Churchill Capital Corporation, and they trade under the symbol CCIV. So all the speculative news buzz and the rumor on the street is that Churchill Capital is discussing plans to merge with a privately held electric vehicle company. And the name of that privately held electric vehicle company is Lucid Motors. So if you're unfamiliar with Lucid Motors, let me give you a quick rundown. They're not a brand new electric vehicle company. They've actually been around for about 13 to 14 years. They were actually founded in 2007. Lucid Motors has 500 employees, and some of them have previously worked at other car companies, including Tesla and Mazda. In fact, Peter Rawlinson, the former VP of engineering at Tesla, is the president and CEO of Lucid Motors. So he's running the show there. In his lead role at Lucid Motors, Peter Rawlinson is leading the charge to build an electric vehicle the way he thinks it should be built. After spending so many years and getting invaluable experience at Tesla Motors, he saw what some of the shortcomings were. So he wanted to address the shortcomings that he saw and utilize his company to build the perfect electric vehicle. I just brought up a daily chart for symbol CCIV, Churchill Capital, and we could see that this SPAC only recently hit the market, right? So it was only established in mid-September, September 2020. And it's been relatively flat until we get to middle of January. So it looks like January 11th is when we started hearing rumors of CCIV merging with Lucid Motors. And based on the rumor, the stock price has climbed dramatically. Let's go ahead and measure that. So as we measure the stock price climb, we can see that in a matter of roughly 14 days, the stock price has shot up 124%. And so this stock closed at $22.35 last Friday, based on just the rumors that CCIV would be merging with Lucid. So the stock for this SPAC company shot up 124% in 14 days based on the rumor that they would be merging with Lucid Motors. So this is a highly speculative play. There's no confirmation yet that CCIV and Lucid Motors are going to be merging. In fact, there's no documents or public press releases that would even confirm that this is true. So again, I have to mention, there's no confirmation that CCIV and Lucid Motors are going to be merging. In fact, there's no confirmation that they're even in talks and discussing it. So just based on the rumors alone, there's investors speculating that the merger will take place, is what they're guessing. And so this has driven the stock price of CCIV up 124%. So just to be clear, I'm not investing any money in this. I don't recommend that anybody invest any money in this as well. I'm only putting it out there because I'm going to be watching it. I couldn't ignore it any longer. I've tried to hold off, but now it's getting to the point where I need to at least bring it to your attention. So I activated my Robinhood account, and now I'm going to take a look at the option chain for symbol CCIV. And I'll zoom in so we can see it a little bit easier. Now, because this is such a new SPAC, and we only have rumors that they might be merging with Lucid Motors, it's extremely difficult, if not impossible, to perform a reasonable analysis of the stock price so that I can actually pick a strike price for my cash secured put. The fact that the stock price has shot up so high just based off of rumor is a red flag indicator saying that I need to exercise extreme caution. So taking all that information and warnings into account, I'm probably going to consider selling a cash secure put with a strike price either at $20 or $17.50. I'm going to run through some of the numbers briefly, since I am considering selling a cash secure put for stock symbol CCIV if the market conditions are favorable this upcoming week. First, the market closed with a share price at $23.41 last week. And for the cash secure put, I would be considering selling one contract with a strike price of $20. And so for that $20, we saw that the option premium was $3.85. So in order to sell this cash secured put, I would reserve $2,000 as collateral. Now, if a buyer purchases my contract, I would receive $385 in premium. And the premium of $385 would give me a return of 19.25% off of my $2,000 investment. I'm already running pretty long on this video, so I'm just going to tell you real quickly. Here's a stock that I'm watching that's priced under $10. It's Infinity Pharmaceuticals, symbol INFI. Go ahead and do some research on it. I know I will be doing more, and check it out for yourself. If you like the information that I've shared with you and you've enjoyed this video, do me a favor and smash the like button. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And to show my appreciation, I'm going to share with you one more stock that I'll be watching this week in appreciation for your support. And the other stock I'm watching is Rekor Systems Incorporated, symbol REKR. Rekor Systems specializes in artificial intelligence hardware and software platforms that can be used in vehicle management and recognition. So when you start thinking about and hearing about automated robo-taxis and autonomous driving, these guys will be one of the ones to help supply that technology. Thank you again for all your support. And I also want to wish you good luck and lots of success with all of your trades.